Well, at least BlueScope managed an improvement from 1.05 billion to 1.04 billion. Loss, that is. That figure includes a lot of write-downs. The trading loss was 238 million, which is almost double last year's. Anyway, it mostly is in the price already, so the shares only fell a bit more than 1% today. Not that they could fall too much more. The rest of the market mostly traded higher, although because of a couple of big ex-dividends, Telstra and Commonwealth Bank, the All Ordinaries ended up steady. Now, those two dividends took $8.6 billion out of the market today. And as I said last week, most investors don't reinvest their dividends, at least not straight away. The rest of the banks went up as well as Westpac, and so did BHP, although Rio lost 1.5%. The rally of the past 2 months has been all about banks and energy companies, thanks to the oil price going up, with a bit of Telstra thrown in for its dividend, now paid. What this chart shows is that up to the past month, the All Ordinaries Index more or less followed the London Metals Exchange Index, and that's because they were both tracking the consensus view about the Chinese and global economies. In the past month, they've diverged because money is flowing into safety and out of commodities, which is not necessarily a sign of economic optimism. The other thing worth mentioning is that corporate profits in Australia are better than expected. This bar chart shows this year's ratio of beats to misses. That is, companies that beat analysts' forecasts versus those that missed, compared to previous reporting periods. Now, they're usually about equal. This time, it's 1.8 to 1. Finally, the Australian dollar was virtually steady, down very slightly against the US dollar, the euro and the yen. And that's finance.